Hi, everybody. William Shishadi here again with Trinity Mortgage. Back to you with another frequently asked question in the mortgage business. I get this question a lot. People say to me, Willie, why would I go to you, the middleman, when I can go straight to the bank to borrow the money? Or its cousins, the cousin question is, why should I not go to the bank where I have a relationship? Or better yet, my credit union. Okay, I always hear this a lot. My credit union, because I have a good relationship with them, and credit unions are known for better rates. And I don't blame the banks and I don't blame the credit unions for this marketing because they do a very good job of marketing. They always say, why go to a middleman when you could come straight to us? We lend you the money. Well, in the mortgage industry, that is just not true. When you go to a bank, and when I talk about a bank, I'm talking about a bank on the street of a busy corner on a main street. You know who the banks are. I'm not going to mention who they are. And you walk in, and you naturally, when you are thinking about borrowing money, naturally the first thing you think about is going to a bank, and that makes sense. But it doesn't make sense in the mortgage business because we all follow the same rules. So when you go into a bank and you inquire about a mortgage or you apply for a mortgage, that is what we call a retail activity. Okay. When you come to me, that's what we call a retail activity. Now, what the bank does is they then take their retail activity and they go to their wholesale department, okay, for that loan. Well, what do? I take your application and I go to my wholesale departments. Okay. Now, you go to a bank, that's retail. The bank goes to their wholesale department. You come to me, that's retail, excuse me. I go to my wholesale departments. Now you notice I said departments. The biggest difference is I have many wholesale lenders that I can shop your loan with. Okay. They only have just their wholesale lender. Okay. So it's interesting. In the mortgage business, banks don't lend you their own money. They make it sound that way because it's a bank, but they do not lend you their own money. We all have commitments from a secondary market. The secondary market is controlled primarily 90% by Fannie Mae and Freddie Mac. We have relationships with them. Banks have relationships. There's not an extra step. We are not an extra middleman where you're going to pay more. Okay. Again, you walk into a bank that's retail, they go to Fannie and Freddie. You talk to me, that's retail, I go to Fannie and Freddie. There's no extra step. Okay, so that's an interesting question I get a lot of times. And with mortgage brokers, almost consistently across the board, when you go to the right one, your loan is going to be done less expensively, it's going to be done faster, and you're going to be dealing with people who have significant knowledge in the mortgage business. So if you like this video, please go ahead and subscribe to us on YouTube. Hit the bell so when another video comes out, you'll be notified. Like us on Facebook. I got to remember all these things. Like us on Facebook. Follow us on Instagram and Twitter. And we'll see you soon. Thanks.